All right, so today we are going to duck dive into cryptocurrency, but specifically we're going to be talking about spot trading, like
Right.
actually trading Bitcoin and all the other exciting digital coins that are always in the news. A listener sent in a great article. It's from Coin Bureau, and it's called What is Spot Trading in Crypto? A Beginner's Guide. So obviously there's a ton of interest in this. What we want to do today is really figure out how spot trading is different from the other ways you can trade crypto. We'll talk about some of the best platforms to use and, of course, how to avoid some of those classic crypto pitfalls that can trip anyone up. To help us navigate this whole thing, we've got an expert here, ready to shed some light on spot trading.
Yeah, it's a hot topic for sure. All the buzz is for good reason too. Spot trading is really the most straightforward way to get into crypto.
Straightforward, okay. But maybe not so simple, huh? I mean, crypto has this reputation for being a little complex, to say the least.
Well, at its core, spot trading is just buying or selling crypto at the current market price, and you get it delivered right away. Like think of it like a vending machine. You put your money in, you make your choice, boom, you get your snack right then and there.
Gotcha. So no waiting around for a delivery truck or anything. You own the crypto instantly. That's a good point to make because I know there are other ways to trade crypto where you don't actually own the crypto right away, but I'm guessing there are some details that make spot trading a little more complicated than just using a vending machine.
Oh, for sure. One important thing to understand is trading pairs. You're not buying crypto directly with dollars, usually. You're actually trading one cryptocurrency for another. So, for example, you might see something like BTC USDT. That means you're trading Bitcoin for Tether. And that specific pair, BTC USDT, that sets the exchange rate between those two cryptocurrencies.
Right, so that's how the value of one crypto against another is determined. Okay, that makes sense. But what about these price swings that everyone always talks about with crypto? How does that whole volatility thing play into spot trading?
Well, volatility is definitely a big part of the game. It all comes down to supply and demand, just like any other market. If more people want to buy Bitcoin than sell it, the price goes up. And of course, if more people want to sell it than buy it, the price goes down. That volatility, it's a double-edged sword. It means you can make a lot of money quickly, but you could also lose a lot of money quickly.
High risk, high reward. I can definitely see why people are so drawn to crypto. So, if I wanted to try out this spot trading thing, where do I actually go to do it? I'm assuming it's all online.
It's all online. And there are a ton of different platforms out there you can choose from. But before we get into the where, let's talk about the how, because you actually have some choices there too.
Okay, so there's more to it than just clicking buy or sell.
Exactly. You'll come across different order types. The simplest one is a market order. That basically gets executed instantly at the best price available. So if you need to buy or sell quickly, that's the way to go. But then there's the limit order. With a limit order, you set a specific price that you're willing to buy or sell at. And the order only goes through when the market hits that price.
So with a limit order, it's like saying, hey, if Bitcoin hits $50,000, buy me some. So that way you don't have to sit there and watch the market all day.
Yeah, exactly. It gives you a little bit more control. And then there's the stop loss order, which is super important for managing your risk. It automatically sells your crypto if the price drops to a certain level that you set. It helps you prevent really big losses.
Okay, so stop loss orders sound like they're essential, especially in a world where crypto prices can change so quickly. But let's get back to those platforms. Which ones are really the standouts in this crowded crypto landscape? The article you sent in mentioned a bunch of options.
Yeah, and they all have their pros and cons. Binance is the biggest one globally, kind of like the Walmart of crypto exchanges. They have a massive selection, but they've had some regulatory issues. So it's important to check what that means for you depending on where you live.
Right, because the regulatory side of crypto can be a whole other can of worms. So besides this crypto megamart, what other options are there?
If security and playing by the rules are your top priorities, Kraken's a good one to consider. They're known for being very reliable and compliant with all the regulations. So it's a good choice for beginners who are looking for some peace of mind.
Peace of mind is definitely valuable in a world that can feel so unpredictable, like crypto. So we've got the giant, Binance, and the rule follower, Kraken. What's our third option here?
For those who value their privacy, there's Uniswap. It's what's known as a decentralized exchange, or DAX for short.
A DX. What makes it different?
Unlike Binance and Kraken, which are centralized, meaning a company runs them, Uniswap has no central authority. It's all run on code and algorithms, so it's a little more hands-off.
So if I'm understanding this right, this is for the I want to be in control of my own destiny type of crypto trader.
Exactly. You bypass the middleman, but of course, with that control comes more responsibility.
Makes sense. Okay, let's say I've picked my platform and I'm ready to buy some crypto. What are the actual steps to make my first spot trade?
First things first, you'll need to create an account on the exchange and be prepared to go through a KYC process. That's Know Your Customer. It's where you verify your identity. It's standard practice for most legit platforms.
Right, they're going to make sure you're a real person, not some crypto bot trying to game the system. Got it, so what's next?
Next, you'll need to link a way to pay. Could be bank transfer, a credit card, even a crypto transfer if you're already holding some digital assets. And this is where those fees come in. They can really vary from platform to platform. So do your research and compare.
You reminded me of my dad planning a family vacation. Always comparing prices, looking for the best deal.
Hey, a penny saved is a penny earned, right? Especially in crypto. Once your payment method is set up, you'll need to fund your account. Make sure you have enough to cover the trades you want to make, plus any potential fees.
That's a good point. Always factor in those fees. Easy to get caught up in the excitement and forget about those little things. That can eat into your profits.
Okay, so my account's funded. I'm ready to trade. What now?
Now comes the fun part. Choosing what to trade. This is where your research really comes into play. Do you want to trade Bitcoin against the US dollar? Ethereum against Bitcoin? The article you sent mentioned a lot of the major cryptocurrencies, but there are so many options.
That must feel overwhelming for a newbie. Like walking into a giant candy store and trying to pick just one thing.
It can be a bit like that. Once you've settled on your pair, you place your order, choosing either a market order or a limit order, depending on your strategy and how much control you want over the price.
And that's where those stop-loss orders come in, to protect me from any crazy losses, right? I'm feeling more confident already. Good. But remember, it's not a set-it-and-forget-it type of thing. You need to monitor your investments, especially because, as we've discussed, the crypto market can move pretty suddenly. Staying informed is key.
Informed, but not glued to the screen 24/7, right? Got to be a balance there.
Absolutely. Let's talk about where your crypto goes once you buy it. You'll have a digital wallet on the exchange where it's stored. But for extra security, a lot of people transfer their crypto to a personal wallet, either a hardware wallet, which is like a physical device, or a software wallet, which is an app.
Right. I've heard that saying, not your keys, not your crypto. Sounds like having your own wallet really puts you in the driver's seat.
Exactly. It gives you more control of your assets, reduces the risk of relying just on the exchange.
Okay, before we get into the weeds of crypto security, which could be a whole other deep dive, I'm curious about the different approaches to trading. Like, are there different styles that people use?
Yeah, for sure. There are two main approaches that are pretty popular: buy and hold and day trading. Buy and hold is just what it sounds like. You buy a cryptocurrency you believe in and hold on to it for the long term. You just ride out any ups and downs in the market.
So kind of like investing in real estate, you're betting on long-term growth. What about day trading? That sounds a little more intense.
Day trading is definitely for the more active trader. Think of it like riding a wave. You're trying to catch those short-term price fluctuations, buying low and selling high. Sometimes even within a single day. It's much more hands-on. Requires a solid understanding of market analysis and risk management.
So buy and hold is for the patient investor, and day trading is for the adrenaline junkie who thrives on quick decisions.
That's one way to put it. They both have their pros and cons. The best approach really just depends on your personality, your risk tolerance, and your overall goals.
Speaking of goals and avoiding potential wipeouts, shouldn't we talk about some of the common pitfalls to avoid? Seems like there are a lot of ways to make mistakes in crypto.
Oh, there are plenty. One of the biggest mistakes new traders make is getting caught up in all the hype, making emotional decisions instead of sticking to their plan.
Yeah, I can see how that would be easy to do. You see the price of Bitcoin going up and up, your finger starts hovering over the buy button. FOMO is a real thing.
Oh yeah, it definitely is. But emotional trading rarely ends well. That's why having a plan and sticking to it is so important.
Okay, so keep a cool head. Even when everyone around you is losing theirs, what other traps should we be looking out for?
Jumping into a trade without doing your research. You really need to understand the cryptocurrencies involved, their market trends, and the overall market conditions.
So it's not enough to just glance at a price chart and hope for the best. You need to understand the fundamentals, like what the project behind the cryptocurrency is actually trying to achieve.
Exactly. It's like buying a stock without knowing anything about the company. You're essentially gambling at that point.
Research is key. Got it. What else? There's got to be more.
Staying informed about market trends and news is really important. Remember how we said that the crypto market is super dynamic? Major events, Regulatory changes, tech advancements, even a tweet from a certain influential figure, all of that can send prices skyrocketing and plummeting.
Right, like that time Elon Musk tweeted about Dogecoin, and the price went crazy, so it seems like you'd have to be glued to the news 24/7 to keep up.
It doesn't have to be that intense. Just find a few reliable news sources and make it a habit to stay updated on the key things happening in the crypto world.
Okay, so no need to become a crypto news junkie, but staying informed is definitely crucial. Any other major pitfalls we haven't covered yet?
One more, failing to diversify. Putting all your eggs in one basket is never a good idea, especially in crypto.
Don't put all your crypto coins in one digital basket.
Yeah.
Solid advice. How does diversification actually work in practice?
It's about spreading your risk. So instead of investing all your money in Bitcoin, for example, consider spreading it across a few different cryptocurrencies, ones that have different use cases and potential for growth.
So you're mitigating risk by not tying your fortunes to just one single asset. Makes sense.
Exactly. Think of it like a balanced diet. You wouldn't just eat pizza all the time, right? You want to eat a variety of foods to get all the nutrients you need. Same concept with crypto.
A well-balanced crypto portfolio. I love that analogy. So to recap, the big no-nos are emotional trading, lack of research, ignoring market news, and not diversifying. Sounds like some really solid advice for anyone navigating the wild world of crypto.
It's definitely a good place to start. But remember, learning never stops, especially in a space like crypto that's constantly changing.
Speaking of evolving, you mentioned earlier that spot trading is just one piece of the larger crypto puzzle. What other areas should people be keeping an eye on?
Oh, there are so many cool things happening. DeFi, or decentralized finance, is really changing how we think about traditional finance. NFTs, or non-fungible tokens, are revolutionizing ownership in the digital world. And then there's the metaverse, blockchain gaming. The list goes on and on.
Wow, it sounds like crypto is more than just trading. It's a whole new way of thinking about finance, technology, and even how we interact with the world.
Exactly. It's about empowering people, creating new possibilities, and challenging the status quo.
Well, my brain is definitely buzzing with new ideas now. We've covered a lot of ground today, from the basics of spot trading to all this crucial pitfalls to avoid.
Yeah, we've really just scratched the surface, but I think we've given our listener a good foundation to build upon.
Absolutely. Now, for our listeners who are like, okay, I'm ready to get started, let's break down some actionable steps they can take today. What's the first thing they should do?
It all starts with picking the right platform. I mean, we've talked about a few, but there are so many out there.
So many choices. What are some of the key things to consider?
You got to think about what matters most to you. Is it security? Low fees? A huge selection of cryptocurrencies. Do your research. Read reviews. Find an exchange that really fits your needs. And your risk tolerance?
So it's kind of like choosing a bank, right? Different banks offer different features, and they cater to different types of customers.
Exactly. Once you've made your choice, the next steps are pretty straightforward. Create an account. Go through that KYC process we talked about. Link your payment method, and then fund your account. And remember, this is key. Only invest what you can afford to lose.
That's got to be the most important piece of advice for anyone getting into crypto. Don't bet the farm.
Couldn't agree more. Once you've got some funds in your account, you're ready to start exploring those trading pairs, setting up your limit orders and stop-loss orders, putting all this knowledge into practice.
It's a whole new world out there, but it sounds like with the right approach and a little bit of patience, anyone can learn the ropes. What resources would you recommend for someone who wants to really dive deeper?
There are tons of great resources. Reputable news sites, educational articles, video tutorials, even online courses. Don't underestimate the power of a good old Google search either.
Google is our friend. But I guess you have to be careful about the information you come across, especially in a space like crypto where things can change so fast.
Oh, absolutely. Always double-check your sources. Make sure the information is up to date. And that it's coming from a reliable place. There's a lot of misinformation out there, so it's important to be discerning.
Solid advice. Well, we've journeyed deep into the world of spot trading today, and I think we've given our listeners a solid understanding of what it is, how it works, and how to approach it, safely and strategically. We've talked about the importance of research, choosing the right platform, understanding those different order types, and of course, all those crucial pitfalls to avoid. But most importantly, I think we've highlighted that learning is an ongoing process, especially in this ever-changing world of cryptocurrency.
Well said. It's all about embracing the journey and staying curious. The more you learn, the more confident you'll become. And who knows, maybe one day you'll be sharing your own crypto wisdom with others.
I love that. Paying it forward. Well, on that note of endless possibilities and continuous learning, we've reached the end of our deep dive into spot trading. A huge thank you to our expert for sharing all your insights today and for guiding us through this fascinating world.
My pleasure. Always happy to demystify the complex world of crypto.
And to our listener, we hope you feel empowered to take your first steps into this exciting world of spot trading. Remember, knowledge is power, and with the right tools and mindset, you can navigate the crypto waters with confidence. Happy trading,